All right, here we are. So this is the Inner Circle 2025 day one. Now, yeah, I can't really say that you guys can have hardline expectations for what you're going to expect this year because honestly, it's just going to be nothing like 2024 in complete honesty, and that's in the best way possible. First of all, obviously, a very significant trade overnight that was called live in the Signals tab. Anyway, I mean, just a huge drop down here. It's nothing that I'm going to try and get impulsive on, right? And be like, oh, what if I missed a move? I don't care about any of that, right? Um, Impulsiveness, over trading, impatience, uh, revenge trading, all that stuff, that's being left behind in 2024. Okay, we're moving forward. We understand what to look for. Like all 2024, we have understand. If you didn't understand before 2024, right, and you got into my live streams, you understand how to form a real sound, logical, structured model. We know how to do that now. Now, all 2025 is just going to be application, applying what we've built in 2024, and all that's all it's going to be applying what we've already set, really set in terms of foundation. So that's that. So you can see here now we slide down to midpoint of this wick. Could be a potential, point of short term support, but I'm not going to expect that to lead to an reversal, right? I would like to see ideally a retracement into some type of 15-minute Fourier gap, and then a continuation down to the sell side. So that's really what I want to see out of price this morning, and that's just going to happen with or without me. So if I find my model to get in tune with it, then that's it. I view this as short-term support to then send price up into fair value, which is, fair value means allowing, each player to get in fairly. Let's check out ES. All right, so I mean, ES just trades smack dab in the middle of new week opening gap. So I mean, respects that very beautifully immediately. Now I'm starting to now. The more aggressive we get here, the more skeptical I am about a short position because all averages are agreeing on this fair swing here. All averages are in agreement here. Yes. Yes, it trades right down to new week opening gap, closes at the midpoint, slams higher, and it's not really leaving any leeway for that 15-minute Fourier gap that I would like to see to actually take a entry point. Like look how extended this is, right? If we were gonna have a continuation, right, I would look for price to create some type of 15-minute Fourier gap in here, but it's not doing that. It's actually almost completely closing in the entirety of this 930 opening range original 15-minute candle. So respecting discount arrays, coming up off of that very, very aggressively. Now, another thing to mention here, okay, I want to bring out the fib. I'm going to take the Asian session low from last night to the high. You can see that we also respect 79% retracement, so both of the bodies are closing above 79%, right? That I mean, all the stuff I'm looking at right now is the stuff I look for some type of buy setup. So, kind of still at a moment where I can more so frame both sides of the marketplace. Not to mention we clear all internal sell side liquidity from those who've been making money overnight. So, I mean, honestly, this is all the type of stuff I look for in me looking at a potential buying setup. So, basically, just gonna be on standby here until around 10 a.m. So yeah, like I said, if I was looking for some type of short continuation, right, it would have created some type of 15-minute Fourier gap here and then retraced up into that, and then the 1 minute time frame, right, I'd scale down, look for some type of SMT or a short-term high to be ran out and then displacement, but we're not getting that. Like this is literally like just showing bullishness to me, nothing more than that. So what I'm gonna do now here at this point is there's two things that are taking place. We're piercing through an opposing inversion Fourier gap now, what is now an inversion gap, and then we create this down counter. So I would expect real time this to act as support to then take us above opening range time based liquidity. All right. So just a simple principle of that 9:30 15-minute candle being completely closed in, right? That would lead me to believe this thing is bullish and not finished yet. Price will respect this inversion for value gap as well as the down candle prior to getting up above buy side liquidity and buy side liquidity. Okay, so you can take that to the bank because it will happen. Okay, same deal here with ES. Okay, we have the inversion for Fourier gap. We have the down candle. So ideally, look to see if it can trade down to the high end of this inversion for Fourier gap. That would be an entry for me, but instead it's just pumping. So I was looking to see if I can maybe get filled here, but it's not giving me that. So in that case, like similar to how I was dropping down there, I'm like, okay, I'm not chasing that. I know everyone else is going to probably chase it. Or maybe it's too arrogant for me to say that, but the fact of the matter is a lot of people do chase moves on a day-by-day basis. That's why the statistics are so high for people losing money. But I'm never the guy to chase a move. We all know that by now. Okay, doesn't need to be said. But when it drops down, I don't really feel anything. When it, slamming higher, I don't feel anything. That's how you have to feel. When you win, you feel nothing. When you lose, you feel nothing. When it's break even, you feel nothing. It has to be that way. I know it's boring. I know it's not pumping you up or whatever. But it's trading. This is a business. At the end of the day, right? You cannot make decisions based on emotion. Okay. And if I have done that, I would have never seen a penny at all from the marketplace here unless I was gambling. So anyway, I mean, honestly, a picture perfect scenario here would be just this candle right here, just simply just trading right down, institutional order flowing, this Ferrari gap and the inversion gap. That to me would have been an entry point. And honestly, I would have looked to, or will still look to get covered above buy side liquidity here. So you can see how extended this thing's getting. Okay, it's probably not going to give me an entry point, which is completely fine with me. So you kind of stack what we're seeing up here with the overnight session. That was called in signals tab once again, right? It offers multiple entry points, right? Sound entry points where you can have a good stop loss, but it's just not doing that here. Okay, so you can now see that internal range as well as time-based liquidity bull has been ran. So the opening range high as well as this internal high has been ran from the marketplace. So I mean, kind of more so just a carnival ride here today. Anyway, like I said, massive drop down. I mean, if you can't tell it in my voice, I'm just very much so not interested in taking an entry point inside of this New York session. We're tracing back up into that range there respectively. I mean, if this thing really wants to continue lower, I wouldn't want to see too much of a, range higher. I'd like to see it respect this inversion Ferrari gap here as well as this tan shaded area, which is that higher time frame gap extended through. I'll expect us to then make our way towards the opening range low. So I want you guys to take this Ferrari gap here, the 952, extend that forward. We trade up into that, respect that beautifully. Now, why do I care about this Ferrari gap? Why does it matter? Well, first of all, take a look at it. Down candle was formed. What was the first most significant Ferrari gap formed? Like, what was formed right after the down candle was formed? This Ferrari gap right here. So that's why I place significance on this one. I'm going to extend that forward and expect this one to be used as resistance to then send us lower. And then to add it on, to give you guys some extra sauce here, going to take our dealing range. Oh, wait a minute. What's going on? What's the most significant Ferrari gap correlated with midpoint of this price leg? Equilibrium. This Ferrari gap right here. So those two factors coupled together would make this one significant. So it's not just some random Ferrari gap. Oh, extend that forward. Let's look at that. It's not. There's a logic behind it. I promise you that, and I just literally just showed you that right now. So how do you know which Ferrari gap should work? There you go. I just gave it to you. All right. ES is leading the way to the downside here. See if NASDAQ can drop down as well. Now, where does this lead into? Like I said, I mean, the immediate respect or the immediate reaction off of opening range highs here, respecting those premium arrays, right? Breaking down. I would expect this to lead us into a breakdown below opening range low. Okay, unless we're going to continue the carnival ride here and really not be poised to do anything. So, like, if we're poised to do something, this market truly wants to move efficiently on the first day of the year, it will, in this context here, revert down to opening range low. But if it just wants to be range bound and continue the carnival ride here that I'm not interested in gambling on, it'll trade down here and revert to sell side liquidity resting below here for everyone that's been buying. All right, very simple. I'd like to see it then collapse into previous weekly low down here. Okay, so my attention once again reverts down below December 20th respective low. All right. Now let's say, okay, real time as I was calling this out and saying that this should be treated as, immediate resistance and then keep us lower, right? And I explained the logic and the why and all that stuff. Let's say that I did short up here, right? Let's say that did take place and then we drop down here. This small little baby swing down lower, 318 to 225. I mean, it's almost 100 handles. I mean, that's ridiculous, okay? Volatility index is severely heightened. So, I mean, not only is this not my model, but also the volatility index is severely heightened. So I got to risk a little bit more if I want to get into this. So, I mean, two factors as to why I would not take a trade here, okay, to be honest. Even though I'm reading this very, very accurately, in my opinion, that's just that, okay. Like I said, okay, bias is still definitely bearish. I want to see previously good low ran, okay. We'll monitor that, but I'm certainly not going to trade it. But other than that, very much so, hope you guys got something out of this. And have a structured video coming out for you guys as well, kind of explaining how 2025 will go. And other than that, guys, yeah, always a pleasure working with you. And yeah, I'm going to close up here.